So I think we're in this first inning of this massive change in how we organize this global society. And therefore, I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $775, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade. Bitcoin has been the best performing asset on this currency debasement theme across any asset class. So it's not that we have a difference of opinion. We believe the same things. We believe the money will be printed. It's just that we in crypto choose an asset that performs better. And so if you take a very short time horizon, like, I don't know, from a couple months ago, and you say, oh, why isn't Bitcoin at 150,000? Well, I'm sorry that you bought Bitcoin 6 months ago, but for anyone who bought it 2, 3, 5, 10 years ago, they're laughing. Like, I don't give a fuck. Right? Where I have so much outperformed the debasement of the dollar and every other fiat currency.
Arthur Hayes starts off by drawing attention to a crucial problem that most investors ignore: liquidity. He contends that the fluctuation of global cash, rather than fundamentals, is driving markets. A cycle of debt and money creation ensnares central banks, particularly the Federal Reserve, and this continuous infusion of liquidity feeds asset bubbles everywhere. Hayes notes that governments would always choose printing over austerity when confronted with growing debt, and that inflation is not really under control. He claims that because of this dynamic, Bitcoin is the most notable asset of our time. Bitcoin has a distinct advantage as a hedge and a growth asset since it flourishes in times of liquidity spike, unlike conventional markets linked to fiat systems. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
When are we going to see, some of this global M2 coming into the crypto market?
I think the premise of that question is a bit flawed because Bitcoin is the best performing asset when you think about currency debasement ever, right? Okay, yes, the S&P 500 is up in dollar terms, but deflate that by gold since 2009, the S&P has not recovered its gold price from 2008. Deflate the housing market by gold again, and not anywhere close to where it was. Tech stocks are probably one of the only things that have big U.S. tech is probably one of the only things that's done well, deflated by gold. If you deflate things by Bitcoin, it's not you can't even see it on the chart. It's just so ridiculous about how well Bitcoin has performed. So, I got asked this question, like, why is there a difference between TradFi and crypto? There's not. Actually, when you talk to a TradFi person and sort of really get down to what they believe, what do they believe? They believe the same things that we believe. They believe that when something happens, the Fed, the Treasury, the BOJ, the ECB, the PBOC, the SNB, they will print money. And what happens when they print money? They buy bonds. So in their mind, because they know bonds and they did a CFA or they went to business school, okay, well, if I buy the 10-year at 5% and it goes to 4% and I lever that 30 times, I become Ray Dalio, right? That's their mind. That's all he did. He went long the fucking 30-year bond on leverage. That is interest rate parity. I can't shit on him. Good on you, like, for running that fucking trade, but that's the trade. We all believe in the same things. It's just that crypto is the faster horse. Bitcoin has been the best performing asset on this currency debasement theme across any asset class. So it's not that we have a difference of opinion. We believe the same things. We believe the money will be printed. It's just that we in crypto choose an asset that performs better. And so if you take a very short time horizon, like, I don't know, from a couple months ago, and you say, oh, why isn't Bitcoin at 150,000? Well, I'm sorry that you bought Bitcoin 6 months ago, but for anyone who bought it 2, 3, 5, 10 years ago, they're laughing. Like, I don't give a fuck, right? Where I have so much outperformed the debasement of the dollar and every other fiat currency. Like, why am I like being all moody that, Bitcoin is not, hitting a new all-time high every day? It doesn't matter that the S&P is at 6,700 or whatever it is. It's still down in gold terms from the crisis. So I think people need to readjust their perspective on this. If you thought that you were going to buy Bitcoin and the next day you were buying a Lamborghini, you're probably getting liquidated because it's just not the right way to think about things. And at the background, I have to recognize that we are in the midst of a unipolar to multipolar change in world order. And change for politicians is bad because, what do they do when change happens? They print money to make sure people feel okay. Mm-hmm. And so if I overlay all these things together, I have a very bullish outlook for the amount of money that's going to be printed between now and the end of the decade. The question just becomes, what are the expectations within the crypto ecosystem about, or just a general macro ecosystem about what that is? I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of this cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about, I'm going to print money to buy defense goods, to hand out handouts to the population. China is, battling with its own sort of deflation and doing drips and drabs of stimulus. They'll come around to the party too, in some way, shape, or form. The Japanese have to do it. The Europeans have to do it. The Americans have to. Everyone has to do it at the same time. And we have this AI robotics deflationary effect, which could completely destroy the fractional reserve banking system if everyone doesn't have a job and now has to service all these debts. What do? Do we fully reserve the system and print money to make sure the banks are okay, or do you let everyone go bankrupt? I don't know, right? We have a lot of big societal choices, and usually when humans have big societal choices, the government chooses to print money first. So I think we're in this first inning of this massive change in the how we organize this global society, and therefore I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $775, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade.
According to Arthur Hayes, the appeal of Bitcoin is that it is unaffected by the way governments decide to use newly created currency. The result is always the same, regardless of whether the money is used for business subsidies, housing, or defense. Fiat currencies depreciate. Bitcoin possesses a fixed supply, however. This implies that Bitcoin's value automatically increases in relation to the system's growing money supply. In contrast to stocks that are based on business profits or real estate that is based on demand and population expansion, Bitcoin's strength stems from the notion that additional fiat money can be created indefinitely. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Throughout into 2026, how many do you think we're going to get, and how?
I don't know. It doesn't really matter at the end of the day, right? The Besson and Trump need money to be printed to fund their agenda, and so the Fed's going to cut rates. There's going to be, maybe it's not direct QE, but there'll be different ways in which money is printed. Maybe it's through the mortgage market. Maybe it's through the banks lending. Maybe it's through these sovereign wealth fund deals that Trump is doing with other nations. Maybe it's through the something like $100 billion or however much there was allocated to Department of Defense as equity to then leverage to then buy stakes in resource companies like MP Materials to help with rare earths, whatever. There's so many ways in which they can provide credit to the system. And yes, this credit will positively affect some particular sectors more than others. But the best thing about Bitcoin is that we don't care where the money is going. We know that as there's more dollars, yuan, euro, yen in the world, that currency is being debased, and this asset that we own that is a fixed supply is going to go up asymptotically.
We're coming to an end of this bull market cycle in this year, or do you think we'll extend it out?
I think we're starting to get to the real meat of the cycle, middle of the cycle, because if you think about, Trump's a new president. Obviously, it's a second term after the Biden administration, and his first term, he's a very populist president. He did the biggest sort of handout to American people since Andrew Jackson with or probably LBJ with sort of the COVID stimulus checks, right? That's not a very, traditional Republican sort of measure to basically say, let's just hand out money to people, make sure that they stop bitching while we lock them in their house for the flu. And so when that happened, he is, had bona fide credentials as a person he wants to win elections. He doesn't have ideology behind it. So winning elections means providing free shit to people. He provided the free shit during COVID. He provided the free shit in 2017 with one of the largest tax cuts ever in American history. And he's going to provide more free shit. Otherwise, him and his, Trumpian Republicans are going to get voted out of office in 2026 and then in 2028 in the presidential election. So I think he knows exactly what he needs to do, which is provide free shit and print money. And that's what he's going to do. And now, obviously, the Fed and certain individuals within sort of the bureaucracy that is the American government have been sort of stymieing his efforts. But, domino after domino is being knocked down. And, by, middle of next year, it's going to be full steam ahead in terms of the Fed's on board, no more Powell. Maybe he's got 4 out of 7 Fed governors and he can do some other funky things with the interest on reserves or the discount window. And you have Besson doing these sovereign wealth fund deals. You have possibly Fannie and Freddie ending conservatorship, and now they can lever their balance sheets and add about $4 to $5 trillion into the mortgage markets, allowing people to re-leverage on their houses. So yes, if the consumer runs out of cash, what does the American consumer do when they don't have money? They borrow it. And so if I reduce the cost of money, then you can borrow more. And so I think that's why the price of money in this instance matters. Now, I'm more of a quantity of money guy, but I can see that. Yeah, okay, you can say the American consumer is tapped out. The housing market's a bit overbought. Well, if I cut rates from 4.5 to 2, well, then you're going to take more leverage and buy more stocks, and max out that credit card and buy a new car and take out a home equity loan. So I think that's a very short-sighted sort of explanation if you sort of believe that the Fed's going to start cutting rates and Trump is going to unlock all this liquidity on Fed balance sheets, the mortgage market. And, another thing that people are not really paying attention to is Wells Fargo has just been paroled out of jail. They were not allowed to increase their balance sheet for many years after the whole fiasco the criminal sort of customer that they did back then. I don't remember exactly what it was, but I think in middle of June or early July of this year, they were finally allowed to increase their balance sheet. There's a very famous macro analyst, Zoltan Pazar, who estimates that they have about $450 to $500 billion of capacity in the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin.
Arthur Hayes reminds us that markets are not always moving in a straight line. The middle of the cycle, when things really become hot, is about to begin. The central banks and governments are laying the groundwork for the economy to be inundated with enormous sums of cash. More credit, more spending, and more avenues for individuals and companies to borrow money are all virtually certain under Trump's populist leadership style. Hayes is unambiguous. It doesn't matter if the funds are used for bailouts, tax rebates, or housing. What counts is that they stimulate financial markets, of which Bitcoin is one of the largest benefactors. He also notes that the cryptocurrency markets are changing quickly. Companies that effectively employ financial engineering to raise their stock values and tie themselves to cryptocurrency will draw massive amounts of institutional money, and exchanges like Hyperliquid have the potential to become global powerhouses. Hayes warns, however, that cycles always end in excess and collapse. The main takeaway is that markets, not the real economy, are driven by credit and liquidity. Bitcoin and cryptocurrency will continue to grow as long as money is in circulation. However, later in the cycle, investors must be ready for the inevitable crashes. Hayes wants people to be aware of the hazards that come with a cycle change, as well as the enormous benefits of expansion driven by liquidity. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.